Hi, everybody. I'm Jeff Barton, and this is the Mortgage Minute. Thanks very much for watching here on either LinkedIn or Facebook or Instagram or any number of other social media outlets that we have access to. And we do this report about 2 or 3 times a week. And again, it's the Mortgage Minute, and I'm Jeff Barton. Let's see, the moratorium on renters and mortgage holders ends at the end of the month, and what the administration is doing about it, the Biden administration is doing about it, is making available funds in order to pay up to 25% of the mortgage for those still affected, about 1.75 million borrowers, people who have loans in the COVID protocol program in forbearance. So that is going to be a help. The one thing I haven't seen, though, is how you apply for that and how you get those monies. Since this is the end of the month, we're going to see a lot of companies out there starting to foreclose if, in fact, the borrowers have yet to exit forbearance programs and have started to pay their back mortgages. It'll be interesting, obviously, to see, and horrible for those people who will get kicked out. Renters are in much the same position. There has been a lack of real direction in how funds available by the federal government are going to help out those particular renters. Given that what it is, there is business being done. There are quite a number of people coming out of the forbearances and getting their loans back into shape. And for those people, since rates have really lowered, it's really an excellent time to get into the finance market and refinance a property at a lower paying payment. Now, if you want to get back in to be able to do that, you have to have at least 3 months active payment in a row and be paid up from your forbearance debt that you did owe. Many millions of people have come out of forbearance, and so we'll just have to see what happens in the next week to 10 days when August 1st comes around. Let's get to some other things. The taper or not to taper. We think that the Fed will begin tapering late this summer, maybe September, October time period. The reason I say that is because inflation has kicked up, and there are a number of voices in the financial community that are saying, hey, you know what, this inflation is here to stay. It's not something that's going to go away, especially with a survey of a number of companies that has been done by a couple of the CEOs and head of hedge funds to see where prices will go at the end of the year. And so seeing that prices will go up and stay up in consumer products across the board as well as essentials, that's why a lot of the pressure on the Fed in order to stop tapering, in order to rebalance what's happening. Obviously, the mortgage interest rates are held down because of the purchase of mortgage-backed securities and treasuries by the Fed, about $120 billion a month. Tapering would mean that number would come down, and therefore the pressure on rates to go up, and obviously the pressure on the treasuries to be able to also sell the 10-year notes at a higher return. All of those pressures will happen. The existing rates today, Friday, 2.87 for the 30-year fixed, 2.32 for the 15, 2.55 for FHA, 3.08 for the jumbo, and 2.42 for the 5/1 ARM. As I said, the 10-year yield, there will be pressure once we start the tapering to increase that, but today it's at 1.288. We are up off our 1.12 earlier in the week, but down from the start of the week at 1.37 to 1.43. All of these things, that keeping the rates at their current rate really means that if you're out there and you have the ability and you need to save that extra money on a monthly or just lower your rate overall, now is the time, because we're looking at a market that is quite a bit different in a couple of months than it is today. Anyway, I'm Jeff Barton. I'm your voice in the mortgage industry. Thanks very much. Sorry about stumbling through some of that. I kept focusing on myself rather than on the information I was providing. Anyway, we'll see you next time. This is Jeff Barton for the Mortgage Minute.